Welcome to readtheticker.com. Today I want to add to the previous swing scanner video to talk about the RTT Laguerre indicator, which actually makes up about 15-20% of the swing scanner itself. Now, the numbers in these columns here from where are we? These columns here all rely on the Laguerre indicator. In the FAQ help, we have a detailed description of how the numbers are calculated. The top part of here explains exactly how the numbers are calculated. For example, the Laguerre indicator looks like this. The long one was referred to the red bar, and the short one is referred to the blue bar. And all we simply do is look at the last 200 days or 200 bars and count the number of days the blue is above the 70 or the blue is below the 30. It's obviously bullish if it's above the 70, and it's bearish below the 30. So we calculate for long and short. So the long is the red one, and the blue one's the short one. And when we do a count up of a position of the red and blue over a period of time, we get a fair idea of the trending capacity of the stock. Right. So the numbers are represented in here, and obviously Ford, BMY, and BA are trending very well because this is the lag short pulse. This is the blue line added up over the last 200 days. So it has 125 days out of 200 of the blue line above 70. Now, that's a quick summary of why how we use the Laguerre in the swing scanner. But the Laguerre is actually one of the most popular indicators to use in algorithms to determine trend. So it's actually quite a stable indicator. And one reason why the indicator is most popular is because when you're looking at a lot of stocks, 20, 30, 100, you want the price action on its own is too difficult to program. So what you want to do is you want to be able to normalize price action into something which can be easily identified in levels. And the Laguerre indicator is the first choice for this. So, for example, here we have a nice uptrend where the red one is above 70 most of the time, and the blue just dips and pulls back. So here we have obviously prices in an uptrend, but to program around that easily over all stocks can be quite a challenge. Whereas when you use the normalization from the Laguerre indicator, it actually determines the trend and the dips as it goes along. So that's a standard buy the dip type approach where the price is actually trending, and there's a dip, and you simply buy the dips. Here is a reversal situation where the Laguerre indicator, the short, bounces up, gets up there, pulls back a little, and shoots back up. So therefore this is the test here, it worked out quite well, and the red here breaks below the lower 30. And as you see, the red gets up and holds up. And a good trend is where the blue and the red actually hold up together, and the red only dips sort of momentarily. So the blue only dips momentarily. Here we have a situation where the Laguerre indicator is actually a state of confusion because it's actually a much more violent reversal. So if the Laguerre indicator is actually confused, so would price actions. Here we get a large ramp up and a very large fall down. So it doesn't. I mean, a good price increase as it goes up and holds at 50% and then goes up. When it falls 60 or 70%, the confidence is shaken a bit. RTT or readtheticker.com has other indicators and market timing tools to help you work out to take advantage of these more complex corrections. But we're only looking at the Laguerre indicator at the moment. So here we have confusion. For example, it takes off here. The red breaks the lower 30, doesn't really get above the 70, fails and comes swinging back down again. So here's a test here. We're obviously thinking that it goes up again, But quite frankly, that chart pattern is a bit of confusion. When it finally does get up there, it holds up for a while. We get a bit of a test, like a dip, but really there's no follow through. So it fails to get back up to 100, and then it fails again. So that's not really good price action or very good Laguerre indicator readings. So between here and here, the whole chart's really stated confusion. So trading within this environment is harder than trading in this environment. So here's a bearish example of sell the rally. Laguerre indicator spends most of the time below 30, the long one does, and the short one bounces up. So selling the rallies there actually works quite well. So that's the reason why the Laguerre indicator is actually a very important part of the swing scanner. One is primarily to normalize price action over many stocks, and when the buy the dip and sell the rally on the chart is working well, the Laguerre indicator actually highlights it very well. And that is one of the primary reasons the Laguerre indicator is a very popular indicator for measuring trend over a wide range of stocks. When there's confusion with the Laguerre indicator, beware, as there's probably confusion in the price action of the chart. The reversals, if the reversals, for example, the short will lead in reversals, as it did here and here. What you want to see is a takeoff of the short hold up for the test, and the red follow it up. Here the short failed, red follows down, and we get a bounce. And obviously that's a sell the rally situation. A lot of folks would have been looking at the chart and been going, "Oh, look, it's on massive support. Let's buy that." But obviously the Laguerre indicator didn't even see any strength because it didn't even get past 70. So that was a big warning sign. Now, of course, as we're a Wyckoff, Hurst and Gann website, price action and volume is primarily our first concern. This is just an explanation of how to use Laguerre indicator just to throw another viewpoint on the technical application of the chart. Thanks very much for watching.